Hello, Sulabh. Happy to see you here at the Fintech Garden inside of Money2020. Quite a great conference. How is for you this conference?
Yeah, no, thank you so much. Yeah, it's amazing. Still early in the day, so people are coming in, but yeah, meeting all the clients and partners and colleagues here is amazing.
Your company, Accenture, published a report recently. Very interesting report. We digged a little bit into the report, and we saw that your team says that there is a number of $13 billion in payment fee that could shift to alternative payment methods in 2030. And your report also differentiates the roles in this chain of payment, like card issuer, payment processor, and so on and so on. Custodian, facilitator. Which lane do you think most banks actually end up in? And which is the worst place to be stuck in this reshaping of the market?
First is the shifting revenue equation. So we will see as agentic commerce starts to pick up, some of the traditional form of revenues like the card interchange and others will be under pressure because, the agent will be able to optimize between the various rails and possibilities. So you would see pressure coming in. Having said that, you've got multiple alternate rails coming up, including, like buy now, pay later has proven that you can charge more if you're adding value to your customer as part of the transaction itself. And then you've got all of these, the digital currencies which we're talking about, stablecoins or tokenized deposits. A couple of prime examples, of course, digital euro, when it comes, it comes. And the possibility of doing programmability on top of it will allow you to actually charge for the programmability or the smart contract aspect. So you would see some of the revenue moving from traditional, current ways of making money to the new forms, some disappearing, some cross-border money revenues moving through, as well as some of the new services like smart contract and programmability coming through. Yeah, I mean, there is a role, right, for different organizations in terms of what they would like to do. There's clearly a role for organizations to provide the rails and the plumbing, as you would call it. And that is still required because in times to come, we will see that resilience and security is just so paramount. And who knows, one day you will be able to charge a premium for providing a service which is more resilient and more secure? Or is it a hygiene and it is assumed to be free? But then, so that's definitely a role which is an infrastructure provider. You've got then the role of customer experience and owning the customer, relationship. And this is where your roles as custodian or the overall transaction facilitator comes in, and you may have your own coins, you may have your own agents and others. And I think there will be coexistence of these multiple roles in the ecosystem. Of course, some of the more progressive institutions will want to have a more end-to-end role. Some of the institutions who are going to take time to react and respond might end up being a facilitator or an infrastructure utility provider.
Let's speak a little bit about the fraud, because your report, by the way, is telling us that around 78% of fraud will just disappear or minimize with agentic payments. What is the working model for regulated banks, for payment institutions, financial institutions, where they have to continue to invest a lot of efforts in combating fraud when agentic payments will be?
Yeah, I mean, fraud is going to be a huge issue. And we saw with the recent, release of Mythos and others that, even the security vulnerabilities will be a big issue in the whole ecosystem. You've then got the liability issue around if there is an impersonified agent or an agent without the delegated authority, who's going to be liable in that equation? And then the fraud equation is going to be significantly increasing. I mean, there are different models, like we know for the card schemes. We have got a clear model around in which cases, Is it the issuer, or is it the acquirer, or is it the merchant who is liable? In case of A2A payments, that model has been evolving, and we have got, like in the UK, the sending and the receiving bank is 50-50 liable. Should the customer raise a issuer or dispute the transaction. But in some countries, the platforms are also involved in that liability model, and then the merchants as well. In case of agentic payments, it's still evolving in terms of where the liability will sit and what would be the liability framework. Is it the organization that is providing the LLM or the agent that is liable? Is it the organization that is binding the LLM to the authority by the customer or the consumer that will be liable? Or is it the financial institution that will be liable? So there's lots of options. It is still evolving. I don't think we have landed on something. A number of protocols have come in which are trying to address this issue, but we've still got some way to go before this is resolved.
If you would have now a possibility or an opportunity to speak with a CEO of a big bank, what advice you'll give him? Like, hey, you need to change this till next Money 2020. What will be your advice for changing?
For a large bank, and I would say to the CEO that you have to keep one leg in today, one leg in tomorrow. What do I mean by one leg in today? What will be expected in times to come, even more so, is the real timeliness nature of the infrastructure, very highly scalable yet secure infrastructure, right? With the whole agents trying to bombard your infrastructure, as well as you have multiple, security as well as fraud threats on your infrastructure. So is your infrastructure fit for the future? Is going to be the first question. And whatever you need to do to remediate it is going to be, it needs to be a focus, because every day that is passing, that a new release of a new AI model is coming, or a new way that the fraudster is trying to enter your system, you have to invest in today. I think you still cannot ignore the tomorrow, which is where all these things around, whether you call it stable coins, tokenized deposits, agentic commerce, etc., there's just so much activity happening. And unless you try some of these things out, understand where you want to position, how in your particular circumstance you can differentiate to your customers and actually, grab the market, will be another area to focus on. That's what my advice will be.
Thank you very much for this short interview, and thank you very much for being here. Have a nice day.
Thank you so much for having me. It was great talking to you.